wanted to seeing a lot of Trump bumps in markets, and that's what I think we've been seeing in December. We got Trump bumps. These are not going to be smooth rallies. These are going to be markets that are up in the morning and are down 2% in the afternoon. We're going to have to get used to that again. We haven't seen that for a while. Back during Trump 1.0, we had issues with monetary policy in the Fed. That created some volatility, if you remember December 2018, and then also with China, and then also with Congress in terms of working across party lines, working with the Democrats. All these events have the potential to turn a 0.5% up day in the morning to a down 2% day by the afternoon. So that's really the environment that we're going to be in, a more unstable, less predictable environment, yes. And investors are going to have to get used to that.
Jose, Treasury Secretary nominee Scott Bessent and President-elect Trump, are they aligned? Are they going to see eye to eye? Because Scott Bessent and his 333 plan calls for quite drastic reduction in the deficit. Trump doesn't seem to have a problem blowing out the deficit. How is that going to shake out?
I think we are going to run deficits. I don't think Bessent's stance on reducing government spending and cutting those programs. President Trump is a populist. He likes to give the goodies out. He wants to make people happy. Remember the stimulus checks back during 2020. It had his name on it. He wanted American families to know that he is on their side. So if you start talking about government spending cuts, and we know Elon Musk has also been a pivotal player on that front, but Trump's personality, his character, does not align with that. So, I think we're just going to run fiscal deficits, and they're going to grow, and those folks are just at some point, within 2 months, we won't be talking about austerity anymore. We'll be talking about trying to grow our way out of these problems.
This is the critical factor, isn't it? Main Street. So ultimately, Jose, do you feel that the Trump administration is going to deliver for Main Street, or are U.S. consumers going to end up having to carry the can for tariffs?
I think President Trump's policies are going to deliver for Main Street. I think that we are going to have some temporary inflationary pressures, but the employment gains and the lower taxation, the deregulation is going to help small and mid-sized businesses significantly, especially folks that are just starting out. In fact, the last few years, we saw the lower income and middle income cohorts haven't really performed well, while the higher income cohorts have performed extremely well when you consider most of them have several investment portfolios, several real estate properties, right? They're levered more to assets, not to income. So those folks that are more levered to income, I think they're going to get a push here with President Trump. And then also, when you have those higher yields, right, paying you to save, right, I think that's also going to be a benefit for them as well. And you could have that asset price volatility. You could see the S&P 500's valuation go down to 18 times forward earnings, Martin Shreed. That's very, very reasonable, 18 times. Right now, we're roughly somewhere at 21.5 or so, right? So if you see that, you have the lower income folks, middle income folks, they can come in, they can maybe purchase a real estate property, they can get into the market, dollar cost average down on the S&P 500 and all those kinds of asset prices. And also from a sentiment perspective, right, it is pretty positive. Folks, Trump won pretty broadly, popular vote, the Electoral College. So, folks are feeling pretty optimistic out there about the near-term future.